everybody, and welcome to AmazingAccuracy.com. My name is Rick. Today is August 5th, 2023, and it's currently 12:24 p.m. Chicago time. Okay, we're going to be doing a little bit of cycle analysis on the S&P 500 now that we have just ended week of August 4th. A very interesting and I think a very important week in the stock market. But also wanted to take an opportunity to kind of share some fixed cycle work. Now I specialize more in dynamic cycles because in reality, natural laws and so forth, cycles tend to shift mildly to the left or to the right, not by large margins, but it doesn't sit still in any locked fixed format. However, using fixed cycles, it makes it easy for anyone to manually identify areas where you would have likely very strong influences or very weak influences. All right, so let me explain what I have here. Right now I've got the SPY chart. So the S&P 500, this is the ETF. This is a daily chart. And the very last price bar here is August 4th, 2023. As you can see, of course, from the date that will show up down here. So you can see that that's indeed the case. Now, using the October 13th bottom low here, Thursday, October 13th, 2022, which was the major bottom in the stock market, the S&P 500 to be more specific, I then would eyeball and look at these major valleys, these bottoms that you see here, you see over here, then you come over here, there's one over here. And by applying the cycle tool that is found in this TradingView software, which you can download and install for free at tradingview.com. I'm not sponsored by them. I just happen to like to use some of the things that the chart does. You can just plot the tool here, and then as you move to the left or right, it expands and contracts. And I have identified what appeared to be around 51 bars, but rounded down to 50 because it allows me to then divide the frequency in half evenly. And so in this case, a 50 bar cycle, which is this big one that you see here, 50 bars, 50 bars, I can divide it to the next harmonic level. For those of you who are familiar with J.M. Hurst, this is something that he teaches in his works. I highly recommend it, that you read it. As a matter of fact, the cycle envelope charts that you find in our F-Dates membership are based on J.M. Hurst's teaching. Anyway, the practice is to find the cycle based on the valley, the bottom, okay, and not off tops. And the reasoning for that is very logical, in that when you see that in strong bull trends, tops tend to occur later within the cycle as opposed to being right in the middle. You would think you'd have bottom, then you'd have top, then you would have bottom, then you would top, but then the market would just simply be moving sideways. All right, just like this is moving sideways. But in reality, there are larger cycles in play that I am not identifying here. For example, if I have a 50 and the smaller one here, smaller harmonic is 25, you can bet that there is 100, a larger cycle, which is 100, and there's likely a 200, and then a 400, and an 800, and it just keeps doubling and doubling and doubling. And one way you can look at this is you can go to weekly or yearly time frames, and you could then notice the higher cycle patterns that you would get there to help you see what where the wind is blowing, if it's blowing on your back to go up, or it's blowing against you, prices going down, and so forth. Okay, I don't want to get too deep in the woods here because this is not something you learn in 5 minutes. But you can certainly do this part right away, and that is just look at a chart like this, and you can see the ebb and flow here, up, down, up, down, up, down. Okay, and even something like see this period right here, you can see how strong this bullish period has been since the March 13th, 2023 bottom, which was a bottom that I was looking for, and I called in 2022 looking for a March bottom. The bottom ended up in October. My call was for March, so I did not catch the ultimate bottom. I just happened to catch the major bottom that led to this big push up, which ended up being the most significant part of this particular pattern here. You know, you have your 1, 2, 3, 4, 5. If you're into like the Elliott wave stuff. Okay, anyway, so this March bottom here, we've had this pattern up here as opposed to this clearly wavy cycle move type of situation here. And you can see this is moving more sideways. Notice this is moving up. So if you're strongly moving up or you're strongly moving down, that's because a larger cycle happens to be in that phase. So let's say that these were 100 bar cycles on a different time frame. Let's say that that right now we're in the upward part, which we happen to be, let's say right here, we're in the upward part of the 100 harmonic, 100 bar cycle. Well, that's going to cause the market to be more upward leaning. If the 100 bar, let's say, was in this section right here, between here and here, then it will pan out more sideways like this. And then if it happens to be on the tail end of that major cycle period, then you'd see more of a bearish type direction in this particular time frame. Okay, but if you look real closely, you'll see prices moved up, then down, moved up, then down, moved up, then down. Okay, up, down, all right? And then you see these minor cycles. If you go down to this bottom valley here, okay, this would be playing to this area here. If you go here, this is playing to this little pullback area here. If you go here, okay, this is playing to this little pullback area here. And then you go all the way over here, which is now in the time period we are in now, and we're going to talk about that later on. We're going to get past the lessons part here first. All right, so if you'll notice here, for example, where they all come together right here, okay, this is a significant bottom. You can see right here, it's a significant bottom. You can see right here, it's a significant bottom. So this validates that there is a presence of this 50 that is anchored to this October 13th bottom. And then we've already covered, see where they're both here. Well, that would be this tiny little pullback here. And again, remember, this is the larger time frame is pushing this up strong, so it's harder to see. And then we're now at another one now, which is going to be very important for us to notice. Okay, if you come over here, now this one didn't look as impressive, but you'll notice that you had a period of rest, consolidation here, this minor pullback here. So again, the higher time frame likely had this, was likely in its upward stroke along with other cycles supporting it, and it just muted the pullback. So this ended up, this cycle pattern here, this 50 bar and the 25 bar, ended up becoming one of the minors of the group of cycles that is affecting the markets at all time. And so you can just see this barely little thing here. Then if you come over here, you can see that was pretty good for right there. If you come over here to this one, you can see again, it caught the bottom. So you can see that it caught the bottom clearly for all of them, except for this was just not as visible. So that helps validate that I have located a valid cycle. Now, it is well known that you can visually see a cycle, you can start to track the cycle, and then all of a sudden that cycle disappears. It doesn't disappear. It's just that the higher time frames or the other cycles, there's multiple cycles at play, a lot of them. And what happens is if they're all moving against the one you're watching, it's going to mute what you're watching. But then at some point in the future, it will likely pop its head up again. So once you've anchored, keep a history of it, and you'll be able to find and locate future significant bottom areas and so forth, or at least you'll be able to time when a bull trend rest is likely to start resuming its trend, and vice versa for bear trends. All right. Now that we've validated the main 50 and then the sub cycle here, which is the half harmonic of 25 bars each, we can start now discussing how to interpret these cycles. So let me lift this up here real quick and let me interpret this for you. When you see, okay, and we're only looking at 2 cycles now, I want you to keep in mind that there are more than 2 cycles at play here. There are larger time frames going on here, larger harmonics going on here. But they all work the same way. They just either work with or against other cycles. If they're moving in the same direction, they're working with each other. Okay, consider these each having values. Okay, going from 0 to whatever that amplitude might be. Let's say it's 10 points for this cycle. Maybe it's 15, 20 points here, and so forth. So as this is moving up, the value of this cycle and the value of this cycle are added together, and we can see that this period right here would be the strongest period for these 2 cycles, from here to here. They're both in agreement, big push up to, as we can see right there. Okay, so we see this big push up. Now, as you go from here to the middle, for example, of the major cycle here, the 50 cycle, okay, notice that it starts to lose its momentum while the lower one is now working against it. And in this case, we're going to start seeing where it's pushing itself down. Okay, you get these little rallies and stuff, but it's pushing itself down. Then you get into the section here where you got the major one is starting to keel over, and the smaller one is now more bullish. Again, they're fighting each other. Okay, so you're still going to just see this thing, making its little minor pop-ups, but the overall move is going to be based on this one here or a higher time frame. But then as it comes to about this point, right about there, the top of this one, now they start to pick up, and they're both now working with each other to move down. Okay, and this is the general way of identifying this. Don't expect what you see up here to be perfectly reflecting what you see here, because I'll say it again, and hopefully I don't have to repeat it, is that we're only looking at 2 different cycle periods. There are more that we're not even considering in this example. Okay, so in this case here, we see that they all come down to here, and we start this process all over again. They're working with each other here, and then you can see that this one's going to start countering against it here, while this one is starting to just slow down momentum here. And then here, this one wants to move up, this one wants to move down. So the one opposes the other. So we got this kind of sideways thing going on here. And then at this point here, they start working in tandem with each other, and they start pushing the market back down again. All right, big push up. Now we got a little bit of conflict between the 2 here, a little push down here, and then they are both now looking to move the market down. All right, so that's how you would use this to help you. And there's much more to this, but I'm giving you basics 101, all right, which should be plenty for you to play with. But now let's take a look at what we're dealing with right now. Okay, As you can see that we put in this top here, and this was on the 27th, I believe. Let's see, yeah, July 27th. So we had put in this top, the upward move is stopped, and we're starting to see that the two here working to push this thing down, we see that happening. But we are now moving into an area. When you look at these valleys, by the way, I usually like to give, plus or minus 3 or 4 bars on each side, because you don't expect it to be exactly in the bottom like you saw over here and here and here, because that's where I aligned it with, all right? But if you come out here, for example, give it a little bit. So what this is telling me is that we are now starting to move into an area where we can start seeing some pushback against the downward move. All right, because we got both these cycles here moving up. Now, we don't know if a higher time frame is currently in its sideways or moving down phase, which will then, of course, cause this to either go down more or slightly sideways. But we're just going to work with what we see here for this time frame. And we're looking at a period where we should start looking for some support coming up in the next day or two. I'm going to look for possibly Monday to put in something that looks like perhaps, let me stretch this out here to make this easier to look at. But notice over here, we have this, I don't know what the identification of this particular candlestick is, some kind of a hammer or something. But if you look, it's similar to that one. Look what happened the next day. Okay, you got one of these little bars here. Let me change my thing to an arrow, make it easy. So you can see this kind of made one of these and then it moved back up. So I would not be surprised if I see one of those, and if during the day it kind of just makes one of these shallow looking bars like this following this drop, because I'm more likely to expect a lower bar on Monday due to this particular bearish bar. But in light of this cycle, for example, right here, these moving on the upward, I would likely expect that we can get one of these little shallow bars. And if we do, for example, get one of these shallow bars, I'm certainly going to be expecting we're going to get some kind of a rally back. Now, this is not going to tell us like how high or how long per se, but gives you a general idea that the powers of this particular two cycles here favor the bullish side as opposed to the bearish side, at least until we get to this point right here in the middle of this lower term cycle where things tend to slow down, and we can be looking for a resumption of the trend to continue to move down. So I'm expecting that we'll maybe get a little bit of something here on Monday, a little lower, a reversal bar of some sort. It could be Monday, it could be Tuesday, it could be anywhere within this zone right here, for example. We can be looking for it to move up. Let me draw some lines here just to give you some visuals. All right, trend line, okay. So let's say we come down to here, okay, and then I gotta keep doing this. Gotta figure out the drawing tools on this thing. Okay, then maybe we get something like this goes up. Okay, then maybe we get something. Let's do this again. I apologize that I have not learned the drawing tools on this thing if it has it. But then we go down. It could be something like this. Of course, I would be expecting that the low would be somewhere around this time period right here. All right. So let me get rid of these puppies here. All right. So anyway, the other thing that makes me expect that we could possibly be looking at a reversal for Monday, Tuesday possibly, is because of my short-term F dates, which are based on geometric math and cycles. And it also is highlighting this time period for a reversal. The thing is that we have to be careful because it's pinpointing this time period, but this bar here followed by a lower bar would be a reversal, and it could be just referring to that. But because of in light of this as well, I put the two together. That's why overall I'm going to be just keeping my eye out for the potential of this rising up. Also, if we can get a horizontal line here, okay, we got to look at, let me change this to that, and let me get my, where's my horizontal line? Okay, we have these two tops here, so we line that puppy up right like that. Okay, these are key points. This is a key zone right here. I'm drawing it right off the tops, but it could be, you know, from there to, you know, give it a little zone here. Or here's the bottom here. We can even use that. So, you know, you have this key area here around 443.90 down to 437.50. This area here where you could find buying happening in this area, because we had it before. See, we had resistance here, we had support here. You have a key zone right here, key level. You know, you can see just here's key level. These are all previous support resistance areas right here. So, but right here, this is the first one it's coming to. There's nothing between here and this area right here. So this would be the next one to look for. You have this gap also to fill. So that's what I'm looking for come Monday. All right, now I just drew too much stuff on here. Get rid of it. And I don't need to keep the line on there. I could visually see it with my eyeballs when it becomes Monday. All right, so that's basically what I'm looking at here in the near term. And if you're interested in which this one here says September 7th, 2023, that's where the bottom is for that. But the major one would be way over here, would be October 12th. So that would be actually a 1-year anniversary to last year's bottom. We would have this other bottom zone here, or negative zone here. So we can see an overall, we don't know how high this will go when it rallies up. But overall, when it's finished with its down, it could start to be somewhere around this area right here. You can see that this is where the downward will really accelerate, and right here to October 12th time period would be a 1-year anniversary and a potential bottoming, important bottoming in the stock market this year. All right. Well, I hope that helps. I hope you learned something about cycles, fixed cycles anyway. And there's a little insight to what you can expect come the August 7th, 8th time period right there. Look for potential support and for a small little rally. There's also little minor cycle turns for midweek. But all that is on the F-date report for our members. So I'll just go ahead and leave it at that for this video. Appreciate you watching. If you haven't done so already, please subscribe to my YouTube channel. Click on the notification bell so that you will be informed of my upcoming videos. And I'll see you in the next video. Thanks for watching. Bye.